Hello everyone, I'm Lisa Wood. I'm from Open Velocity. I'm here with my colleague John Paget today. So welcome everyone, really nice to see you. We're going to take you through the latest findings to a report that we issued a couple of months ago. The research was done a couple of months ago, and we just want to share with you some of the findings that we found. So just a little bit of background to Open Velocity. We're a marketing strategy consultancy. So what that means is we work with clients. We tend to work on things like growth plans, go-to-market strategies, competitive positioning, those kind of projects. And the reason why we wanted to do the research that we did and then write the report that we have, of which this webinar has come out of that, is that many of our clients have tech as sort of a significant part of their competitive advantage. And so we wanted to take those types of customers and really understand in a little bit more depth what marketing brings to those types of organizations. So that was kind of our motivation for the research. So just in terms of who we actually spoke to, so you get a bit of a flavour of who we spoke to. We spoke to all companies where they said that technology was part of their competitive advantage or IP of the company. We work with both B2C and B2B organisations, so therefore we covered both angles there. And we talked to real senior leaders within those organisations because we wanted to sort of go in at the top of the organisations and find out their perspectives of what marketing brought and sort of the role it played within their businesses. A range of businesses from startups to much bigger sort of high growth companies with a range of revenues. So that just gives you hopefully a good flavour of who it was that we actually talked to in this research. So one of the things that we really wanted to probe into was kind of what do marketeers in organisations bring. So we actually looked at those organisations where they had senior marketing expertise central in their teams in-house. And one of the things, or two of the things actually, that we found very clearly is that if you've got marketing expertise within your business, then you are more confident about that target audience. You have a clearly defined target audience, and marketers are very much bringing that to these organizations. They're also helping these businesses make sure that they have a unique perspective that they can go out to market with, that they have a clear competitive advantage. So you can see there on these charts that the red businesses are with an in-house marketing expertise, and you can see that they're much more confident about having that target audience, and they are more of those businesses are saying that they have that distinction in terms of unique selling points. And that didn't surprise us at all. That was what we were expecting to find, because that's kind of where marketing focuses and brings its magic to organizations. But then we dug a bit deeper and started to look at organizations and what their expectations were in terms of the marketing investment focus. And this did surprise us, because what we found is where there was a senior marketer or CMO sort of leading for the business, that they had a much more short-term focus when it came to marketing investment. So to us, when we kind of thought about that, for us it was indicating that some real pressures exist within these types of organisations to deliver that in-year return on marketing investment. And to some degree, we think that that is pressure that's been put on by the marketeers themselves, because if you look at the founder profile, or actually someone else who's on the executive team, those people are taking more of a long-term view. So I think we've got to be careful here as marketers that, you know, we know we can prove our return on investment, but also don't assume that it is the people around you in the executive team or the founder or the CEO that is putting that pressure on you to actually bring that marketing return in. So that was a surprising finding for us. Another surprising finding was that organisations where they had this more senior marketing expertise within them were less likely to have validated their propositions before going to market. So again, you know, we can unpick this and try and understand what's happening here, but it feels as though sort of where you've got a tech-led organisation, there could be either more bullishness about getting to market without validating it with your customers, or actually more pressure within those businesses as well to show a return on investment. And I see that in one of the clients that I'm working with at the moment, is that they haven't validated their proposition externally before going to market. And there's just a general sense of, because it's technology, it's innovative. But I think we've got to be really careful there not to trip ourselves up and think that because it's tech and we think it's innovative, that consumers and customers also believe that it is different. And we definitely saw within this research as well that, you know, sometimes this tech really isn't very differentiating. And you've got to find that sweet spot with your customers where what you bring is actually differentiating yourself. So John, I don't know if you've got, you know, a few comments you'd like to add here in terms of kind of why you think that we're seeing these results of sort of more pressure being put on shorter term returns within these types of businesses, and particularly where marketers are involved.
Yeah, well, I think first of all, hi everybody. And I think you covered off the findings and the research there really nicely. And I think one of the things that really stood out to me that you've just talked about was the number of businesses that really believe that they had a really clear USP. And the reality is that not a lot of businesses have a clear USP, but it doesn't stop them believing that they do. And I think this speaks to the trend that we found of overconfidence, or there's being high levels of confidence throughout, right? That was a real key theme that we found from the research. And I'll go on to talk a little bit about that and how that manifested itself in other areas in a second. But I can definitely relate with what you were just saying there in terms of, you know, I've got a recent client that had been established for a couple of decades, was a service-oriented business and wanted to continue growing. And you know, one of the findings from our research said that 1 in 3 businesses had rushed an idea to market, and as you were saying, hadn't validated that with the market. And this is exactly what this client did. And over the course of a couple of years, developed a whole suite of products. There was even more risk here as well, because they were stepping outside of their traditional target market. So it was even more important that they stopped, slowed things down, and checked that what they were building was actually wanted by the market. And they didn't do that. And we know from this research that a lot of businesses aren't doing this. Now, the net result was that a couple of years later, they were trying to promote themselves or trying to promote these products out of the problem that they'd got themselves in. And they were throwing good money after bad, believing that it wasn't the product that was at fault. It was the fact that nobody knew about these products. So they actually made a compound series of mistakes. Firstly, they didn't check the idea was wanted by the market, which they subsequently found out it wasn't. But then they believed it was a promotional problem and ended up spending an awful lot of money trying to get that product in front of an audience that simply didn't want it. And if this is happening in 1 in every 3 businesses, there's an awful lot of inefficiency. So, as you said, it's a common challenge that we face.
Yeah, and I think as well that even if you have checked, you know, as time goes by, consumer expectations absolutely changed. So I think it's also being really mindful that you might have checked it at the beginning when you went to market, but actually you need to keep sort of the check-ins with your customer and to make sure, and the competition, to just make sure that what you're offering is still sound and still meeting those customer expectations, because expectations move on. I think another point that's kind of worth bringing up here in terms of, you know, the pressures on marketers to deliver that very sort of short-term return, or very much sometimes I think it's an in-year return that businesses, you know, expect to see from a marketing budget. And I think it's worth just sort of delving into here that I think that changes and it's different for different types of organisations. So I've worked as a CMO for, you know, a number of different types of organisations, and that expectation on investment changes very much with that organisation and the culture of the business. So, you know, I've worked for PE backed companies where there's an investment cycle. And so therefore that's been, you know, your marketing has to contribute to showing performance within that, not just within that investment cycle, but every year within that investment cycle. So that kind of investor-backed business has much more tendency to have a real focus on short-term in-year returns because there's investor pressure there to do it. Whereas I think there's other businesses that, you know, I've been in a startup business where I've built a brand and we wanted to build a brand. We went in knowing that we wanted to build a brand. And you can take a much longer term view then, because you know the sense is that we're building something here for the long term and you want to invest in it. But John, what's your experience of that?
Yeah, I've similarly been in a business like that, and I think it can be really difficult. And I think we can come on to how marketers might sort of navigate this towards the end. But I found myself in a business that was exactly that, where and there is a lot of there are a lot of factors that can affect this. But the situation I found myself in was that the business was struggling to grow, and investors were wanting to see almost immediate returns for any money invested. And there's a whole series of different factors why that might be. But the problem is that that's an exact point where we as a business needed to take a step back and realize that it wasn't a short-term problem that we had. It was growing demand for the longer term and differentiating ourselves from the competitors, which was what we need to be focused on. But the reality was that whether we were successful or not was being measured almost on a quarter by quarter basis, based on hitting certain revenue numbers and keeping certain costs down. And that's an incredibly difficult position to be in, because it's a self-fulfilling challenge, for self-fulfilling prophecy that the business is going to find itself in. And it's a very difficult place to be as a marketer when you find yourself in that situation.
Yeah, and I know we've explored this before this report in the B2B market as well, is that seems to be that pressure's there even more, I think, in B2B businesses, because you know they have a limited amount of money that they're spending quite often on marketing and want to see that return. But then, you know, the flip side of that is in a B2B market, you've got much longer buying cycles as well. So you're kind of under pressure to show that return. But, you know, quite often that return isn't there because people aren't in the buying cycle, because those buying cycles, you know, can be 2 to 3 years long. In some cases. So I think that's another sort of angle here on the B2B side. Something else I just kind of wanted to explore as well is sort of performance marketing versus, you know, brand marketing, because, you know, I think as well as marketeers, you know, performance marketing has become much more dominant in you know, the last 5 to 10 years, and that in some ways, you know, my reflection on having been there and done it is that we've actually trained businesses as marketeers to expect immediate results, because in a performance marketing world, you can track and you can show that performance, you can show an ROI, and we've we've actually educated businesses to expect that return, and therefore we want to keep delivering it. But the issue then comes when you can't actually continue to get the same ROI out of your performance marketing without adding in that broader dimension of actually growing distribution, growing brand awareness, growing brand advocacy. And actually we've actually taken our eye off the ball a little bit in educating businesses that you also need that for the long-term sustainability and growth of a business.
Yeah, and I think we chatted before, but a really well-known example of this is Airbnb.
Yeah.
Who, I think they've, like a lot of businesses, they've sort of ebbed and flowed with their view of where marketing budget is spent. But they recently, a couple of years ago, they had a new CMO come in. They were quite public with how they described their addiction, I think, as they called it, to the drug of performance marketing. And I think that it's really easy, as you said, £1 in today and 3 or 4 out tomorrow from just sales-based performance marketing. And that drug is addictive. And if you've got some of these other pressures that we're talking about, like Airbnb had, you find yourself completely getting the balance wrong of where brand and strategic marketing is versus your short-term focused, call it what you like, performance or sales-led activity. And they woke up one day, I guess, and realized that they needed to change that balance. And so they're a really public example, but lots of businesses are in the same spot.
Yeah, it's different cycles, isn't it, for different businesses, I think, as well. So it's probably a good time to sort of move on to look at sort of confidence and the types of companies and how sort of marketing impacts at different stages in a company.
Yeah, sure. So if anybody on the webinar has got any questions, by the way, from anything that we've covered off, please pop it in the chat. We'll try to get to it at the end. If we run out of time, we can maybe email round some of our thoughts after the webinar. But yeah, so I was mentioning in the discussion just a minute ago about confidence, and that's one of the key themes that came from this. So what you're looking at is in the top left is how confident businesses are in delivering their growth goals over the short term, over the year ahead. And in the bottom right, it's a slightly longer time frame. Now, what's really interesting is that these numbers, generally speaking, these confidence levels are really high. Now, if we take a step back and you think about the context of the economic situation that we find ourselves in, the IMF has predicted the UK's growth forecast to be less than 1% this year and not a lot better next year. That's mirrored in a lot of the Western economies that we would compare ourselves with. And here in the UK, we're going to have 28-ish thousand businesses fail in 2024 alone. And that number is up 50% from pre-pandemic levels. Now, if I throw one more number into the mix, it's 40% of businesses, only 40% of businesses are going to make it to the 5th year of operation. So the first thing to say is that economic difficulties are not the only influence and pressure on businesses, right? So if we think about tools like PESTLE, there are lots of other political, social, technological factors that are going to affect the marketplace. But in light of what feels quite difficult growth environment, we've got our sample research telling us that businesses are bullish about growth, which is a really interesting contradiction. And when we sought to understand this a bit more, it's clear that the scale-ups are less confident than their startup and high growth relatives. And in fact, B2B was less confident than B2C. And we can have a whole different webinar on why that might be. And we've actually written about that in a trends report, which you can get as a free download on our website. But the scale-ups are less confident. And we wanted to explore that a little bit more. And so that really came out in some of the other questions that we asked. And what we found was that the marketeers and business leaders in those scale-ups were really struggling to differentiate themselves. And they were struggling to be heard above the cacophony of noise that was present in their marketplace. And as we started to understand this, we need to understand it by looking at the way that high growth and startups differ. So if we start with high growth first, high growth businesses by definition have got beyond these bumps in the road. They're more established in their market. They've got a stronger reputation. They've likely got bigger levels of investment, and they've been around a bit longer. So they've gone beyond these typical challenges. They've got challenges, but they're different. You then look at startups. The definition of a startup is often that somebody has seen an opportunity in the market for an unmet need. And that usually means that most startups are coming to market with a good degree of differentiation. So a startup will enter the market and mop up what we might call the low-hanging fruit, the small proportion of the market that's looking for that product there and then. And because of a high level of differentiation, they can stand out. And this is the growth that fuels startups towards the point of becoming a scale-up. But the problem that they've got, and what a lot of startups realize, is that there's only a small proportion of the market that applies to. That low-hanging fruit typically will represent about 5% of the market. And once you get to a scale-up stage, you've gobbled up all that low-hanging fruit, and growth is more difficult to come by. And if we also think about the realities of a scale-up, you've probably been in business a bit longer. You've got more competitors. The competitors that are there have had chance to catch up, eat into any differentiation that you've potentially entered the market with. Or you've maybe seen other competitors enter the market and usurp your positioning or your differentiation. So it's a really difficult place, and there's all these different competing factors. And so this is part of the reason why we found scale-ups being less confident than some of the other businesses. If we skip ahead, Lisa, to the next slide, this is one of the graphics that we tend to use as a way of being able to illustrate these points that we're making. And really the learning out of that previous slide and the things I've been talking about is it's important to know where you sit as a business on this graph. Because if you're a startup and you've got an unknown brand, you lack credibility, you've got a limiting budget, or if you're a scale up and you're struggling, as the first top factor there says, establishing differentiation, what I've just been talking about and what we were told by our research, through to building trust and finding that growth starting to stagnate. And then finally, if you get to high growth, where the challenges are there, they're just different. So they're market expansion. Can we find new target markets for our existing products, or can we expand the number of channels that we're using to reach to drive incremental reach and frequency? Got to understand where you sit so that the challenges that you need to tackle can be prioritized as part of the marketing process that you have within your business. And so we're going to get on to some advice, but this is one of the things that we would suggest that you do to try to tackle some of the points that we've been talking about. Lisa, back to you.
Yeah, I think it's just worthwhile. We're on this chart. It's just kind of, again, taking it back to that point about short-term versus long-term focus in your marketing investment. And certainly kind of think this graph illustrates it really well, is that, you know, when you're in startup mode, you have got really limited funds to play with. So you tend to focus those on that sort of bringing in the business, which is absolutely the right thing to do. But as a marketer, you've got to be thinking about what comes next. And so that sort of having an over focus on short-term return and, you know, making sure obviously your sales are coming through the door, your revenue is coming through the door. You've got to be building the building blocks that, you know, are going to hit you as you enter the sort of growth and expansion cycles. So think about, you know, how are you future thinking and putting a small little bit of your marketing attention at the beginning into growing that for the longer term. It's just kind of, you know, another good example of kind of that short-term versus long-term balance in marketing spend. So yeah. We've just kind of put together some questions that, you know, everyone should be, you know, all marketers should be asking themselves, just to sort of be able to tick it off and say, yeah, I have got that balance. Or am I seeing these problems? And if I am seeing these problems, then what do I do about it? Because, we need to be thinking in terms of that kind of future state of what it is, the jobs that need to be done by us as marketers. So, you need to have that USP. And as John said earlier, articulate, that needs to be clearly articulated, tested, defined, ideally with your target audience, so that it really is a true USP, and it's not just your own internal confidence that is telling you that yeah, we're good on that. You've got to test it externally as well, and that's also kind of leads into the target audience bit, which is do you know that you're hitting the right target audience, and are you getting the right people that you expected through your door? I'll not go through all of these questions, but I think if we turn to sort of advice around these questions, you really you need to be thinking about that longer term sort of jobs that need to be done, and think about how you're setting the framework for building your strength of reputation in the market. And there, there's some very easy things that you can do, things like, Trustpilot, reviews if you're B2B, making sure that you've got the evidence around you that consumers can look at and go, yeah, okay, there's some good trust factors there, and building a positive reputation. Have the performance metrics to hand so that you can see in your performance metrics what's happening, and not just the obvious ones, but actually, some of the brand building metrics as well, not overly focused just on that performance marketing, and make sure that you're weaving in your long-term success factors as well. John, advice from you?
Yeah, I guess my two are based on what we see from our clients, and the first, I guess, is to try to avoid the mindset that what's worked for the last couple of years might work for the following couple of years. And I think there's a real risk. This could happen in any business, but I think it's more likely to happen in businesses where the sales and marketing of a business is controlled by just a few people. And I think this brings us back to these questions, because I think if these questions are at a review of the marketplace, so that are our customers the same customers that we started serving? Are they still there? Are they still the same people? Have they still got the same needs and motivations? And is our competition, do they still look the same? Do they still sound the same? Are they encroaching on our own messaging? If we're doing this on a regular basis, and really, I guess the learning here is that a lot of businesses don't do this on a regular enough basis. It's forcing us to ask these questions and to see ourselves and where we fit within the market. And I think that's a really useful process to go through. And I think we get asked, how often should we be doing this? And that is different, because it's different depending on the type of business you are and how dynamic your marketplace is. But if you're doing this every 12 months, that's going to be more common than we often find, and will be a good benchmark to have an annual marketing planning process where you're asking some of these questions, and it will just help ward off that mindset of, well, it's worked before, it will continue working, because experience tells us that it just doesn't happen. And then the second is to I really echo a point you've touched on, Lisa, is to be really disciplined from as early as you can be about introducing brand development and strategic marketing as early as you can into your marketing budget. There was some really good research earlier this year, that found that about half of B2B businesses don't invest any money in strategic marketing at all. And yet they're the types of business that would benefit most from it. So right from the get-go, there is some questions that can be asked about the makeup of your marketing budget. And, there's all sorts of guidance about what the split should be between short-term sales activation and brand development. And there's an often cited guide of 60-40 in preference of brand development. I've yet to find a startup that's spending 60% of their marketing budget on brand development. But wherever you decide to draw that line, the important thing to recognize is that there are two things you have to balance. It is not all short-term focused activity. And I guess that's we've both sung that message that from as early as you can, you need to be starting to think about building the brand, because going back to the point I made about only a small proportion of your market are going to be in market and looking to buy from you at any one time. The brand work that you do is speaking to the larger proportion of your market who aren't buying today, but might be buying in the next 6 months or the next 12 months. And that's where that brand work will really pay off. And it's never too soon to do it. So those would be my 2 bits of advice.
Yeah, and I think just jumping on the back of that as well, John, is just kind of the role that we play as marketers in organisations is, having that dialogue and educating the people around you that you need to have that balance. And actually, that even if you are performance marketing, ROI driven right now, start telling the story, so that people actually understand how marketing works, and that, it's not just all about playing at the bottom of the funnel. It's that you are going to have to, at some point, invest, and therefore sort of start planting those seeds, I think, in the dialogue that you have, and don't get overly focused on ROI in year, because that's great when you're seeing it perform, but when that slows down and plateaus, then that's a big problem that we've got to deal with. I'm just going to close on sort of a final finding from the report, because I thought this was really interesting from a whole load of businesses that were really confident that they were going to meet their future sort of success and revenue targets. So these were a confident bunch of businesses, and we asked them if they could just sort of fix one thing about their sort of about marketing, or do one thing, or have a question answered for them, what would that be? And virtually every respondent said, I'd love to know more about my customers. I'd like to understand my customers better. So even though in the research, they were telling us that they knew the customers, they knew the target audiences, etc. When it all boiled down to it, the one thing that they actually felt quite distant from is their customers, and not having enough insight. So I think there's an overarching message there, which is it is so important to get under the skin of your customers and to know your customers, because that has been proven time and time again as a key success factor in building a long-term and sustainable business. And we've got, those stats and that quoted in the report that we've written, but, it really is a contributor to that sort of revenue generation and revenue acceleration as well. So that's kind of that's us done. We've kind of taken you through a whirlwind of with a particular focus on sort of the marketing role within tech organisations. If you're interested in the broader report, please go and download it. It's got, some of the charts that we've used today are in here, but it's got a whole load of other sort of intelligence and insight as well, along with some great market stats if you need stats within your business to sort of, to back up what it is you're saying. And hopefully you found that sort of thought-provoking and useful. And if there are any questions, I don't think we've had any questions. I'll just chat again, but feel free to stick questions in the chat.
Yeah, I guess just the last thing from me, Lisa, would be to say that if anybody on here isn't following us on LinkedIn, that's the best place to stay up to date. We often run we write reports, we're commissioning research, we share things that we are learning from working with our clients. So if you want to get in touch, that's the best way to do it.